Hello investors, welcome back to the Trend Trader channel. Today I want us to look at a couple of tips that we'll be buying on our Easy Equities account, or you can use whichever broker that you are currently using. We are going to be looking at 4 stocks today that have been dipping for a while, but they have found support. So that's why we are going to buy the dip. But before we proceed, I would like to ask you that you click the subscribe button on YouTube and subscribe to our channel, and also make sure that you hit the bell notification so that you don't miss out on any video that we'll be uploading on the future in future. As you can see there in our channel, we have a lot of videos that can assist you in terms of improving your trading result. We have a lot of stocks that we have there, and also if you're interested in trading, you just starting as a trader, we have this 3-part series where we talk about stock trading. So that's the first video, second video, and the third video. It plays as a playlist. We also do cryptocurrency analysis. So yeah, just make sure that you subscribe to the channel. We have a lot of videos there, especially if you want to learn technical analysis. You can go back to some of the trades that you have done in the past and see how they have turned out, and then follow them. Just follow the thinking behind each trade. Then you will have an idea on how you can use technical analysis for consistent profitability in the market. So that's that. Just make sure that you click subscribe and you click the bell notification. All right, so let's dive straight into the market and look at the dips. So the first market that, or the first stock that you're looking at, it's a Standard Bank Group there. So we saw that Standard Bank Group has been on a downtrend for a while. So that was before 2021, and then it broke above this resistance level, which then started to create another range, another trending range, which was above this the previous range there. So now this tells us that we can expect to see Standard Bank breaking above this trading range and then start to trade in a new range. So we're not predicting that this is going to happen. It is just something that we are expecting and would like to see. So as soon as we see that, then we would like to continue to add onto our existing Standard Bank position. But for today, we saw that Standard Bank, it came to this previous highs there after it, after it bounced off this level, it came to this recent highs, and then there it fell, coming back to the 200-day exponential moving average, finding support there. So that's the rationale for this trade. So how we're looking to play this trade, we are targeting this previous or recent swing high. We saw that it found support in here. So the best place to buy the Standard Bank dip was somewhere around 130 Rand per share, but still currently trading at around 138 Rand per share. So you can buy a Standard Bank here, anticipating a move to go back to 150 region, and then you can have your stop loss just below 130 Rand per share. So this is going to be a short-term target. The short-term target is 150 Rand per share. But also what we are expecting is that the stock is going to push further high above 150 region. So for short term, we are targeting 150, but in the medium to long term, we want to see a Standard Bank trading above 150 Rand per share. So that's the trade that we're looking at here on Standard Bank. Like we said, we saw that it dipped coming back to the 200-day moving average and then finding support there. So now we're expecting it to continue to trade higher, going back to 150 Rand per share. But that is a short-term target. So if you want to take a swing trade, that's a good swing trade to take there. But for medium to long term, we expect Standard Bank to trade above 150 Rand per share. Then another bank that is showing a dip, another dip that we are buying from a bank, it's a Nedbank. Like we said previously, we are bullish on the financial sector. So you can check that video there. is going to pop up there on the YouTube channel, but it's also going to be there in the description below so that you can go to that video. We said that we are bullish on the whole entire sector, but even there in that sector, we look at individual stocks because we get different opportunities. But something to keep in mind at the moment is that the 200-day moving average is starting to point up here on Nedbank group. So that's a sign of a continuous uptrend. That's a good sign there. As we see, it came back to this level, which was that previous resistance level. The level that it broke away, or it broke above around June or so. So it attempted to trade higher, came back, found support. As you can see, it kept on bouncing somewhere around this level. But something that you should pay attention to is that this here, each swing low, it's becoming a lower high. So this low is higher than the recent low, and also this recent low is higher than that previous low there. So that tells us that we're expecting a breakout at this level, of which the breakout happened yesterday at around about 108 rand per share. So we're looking at this breakout. So what we're looking at is just that the market is going to trade at a range that is equivalent to this range. So that's about a 20 rand range. So we can expect Nedbank to push to about 200 rand per share there. So that's the trade that we'll be taking. But this is just a short-term move that we are looking at to go to about 200 rand per share. In the medium to long term, we also expect, like Standard Bank, we also expect a Nedbank to push beyond 200 rand per share. But like I said, these are just some of the short-term trades. We do swing trades, and we also hold some positions for long term. So just a quick recap. We see here that Nedbank has just been trading above this, contracting this range, and then yesterday it broke above it. So we're looking at the stock. So whenever a market is trading within a range, when there's a range breakout, you normally expect that it trades in the similar or equivalent range on the upside or on the downside. It depends on where it breaks at. So now we're expecting that Nedbank is going to push to 200 rand per share. So that is our short-term target on Nedbank there. Okay. And another stock that we want to look at is Mr. Price. We already shared this trade in our trading group. All these trades, they show similar characteristics. We saw that Mr. Price broke above the 200-day moving average. So it came all the way to this resistance level there. It struggled a bit, pulled back, but as you can see, the 200-day moving average is pointing up. So by default, it did find support, and then eventually it broke above this level here. Then it traded higher, reaching these recent swing highs. But then it looked like a top, double top there, and then it fell back to the 200-day moving average, which also corresponds to this previous resistance level there. So at this level, we're expecting some support that Mr. Price is going to find support at that particular level, and it's something that we observed there. So we saw Mr. Price coming from this top back to this level, finding support. So what we're looking at, we wanted to see Mr. Price rejecting this any prices below this level or below this previous support level. So now we saw that it tried to trade a bit below that level, but then it started to consolidate, moving sideways there. So we already have a position there. We entered this position a couple of weeks ago. We are still holding that position. As you can see in this swing trade, you can see our current stop loss is somewhere around 190 rand per share. We entered the trade at about 200 rand or 201 rand per share. And then we are targeting this recent highs there of about 240 rand per share. And this trade give us about 1:3 risk to reward ratio. Like I always say, every time you take a trade, you must make sure that the risk is worth the potential reward. So that is what we are looking at Mr. Price. As we know, it's just a technical analysis. Most of you already know what Mr. Price is doing in terms of fundamental analysis. You know what it does as a company. It's a retail, it's growing, it's expanding. The earnings are increasing. As you can see here, they paid, the earnings at that time, they were just above by 62 cents, which was a surprise. But I mean, you know, if people, they make predictions, you can't really say you are surprised, because with predictions, you are going to be wrong. So we can see the earnings at that time that they were 262 cents there. So that's the estimated, but they reported the earnings of 229 cents. So that was greater by 62%. That's what they mean by saying that they were surprised. Then when you look at the recent earnings, now the earnings increased from rand something to about 7 rand 80, which is a significant growth. But they are yet to release the latest earnings. So the latest earnings are coming up on the 22nd of November 2021. And then if you look at the dividend there, in December, they paid a 210-cent dividend. That's the gross dividend before the dividend withholding tax. And then the dividend increased, it almost doubled. It went to 462 cents. So as you can see, Mr. Price is a heavy hitter. But for now, we are just looking for a short-term swing trade, but it's a good stock that you can add into your portfolio for long-term investment. So that's it about Mr. Price. You can see the trade there. It found support near this support level. So from there, we expect it that it's going to bounce, moving all the way to this recent swing high there. Yeah, so with technical analysis, a lot of things are just simpler. We don't need a lot of stories to make money from the market. You just have to look at the market structure and see what is more likely to happen. You can't say that you will know for sure what is going to happen, but you just have to, whenever you enter a trade, make sure that you have a stop loss, because a lot of things can happen. Like we saw earlier around June, there were protests in some parts of the country. A lot of companies, they reported challenges already. So as much as we saw nice increase in earnings from Mr. Price can still say that they were affected by the protest, and then you can see the stock dipping, especially if they report poor earnings compared to the earnings that they reported in June. So anything is possible. Always bring the stop loss with you when you're going to the market. And then the final stock that I want us to look at is Woolies. A lot of people love this stock. So I'm sure by now I don't even need to tell you why we are buying this stock, because you've been following this channel, you've been watching the videos on this channel, you are a subscriber, but we will just do the analysis. And if you're not a subscriber yet, just make sure that you click subscribe now and hit that bell notification. And if you enjoy the analysis that we do on this channel, make sure that you like the video and you share it with other people that you think might find value from this analysis. Okay, so back to Woolies again. The 200-day moving average is pointing upwards, which signify an increasing uptrend there. Then we saw Woolworths breaking above this level somewhere the late 2020. So at some point it struggled a bit here at this resistance level. If you can zoom out, you will see that there's this recent highs there, or the highs there, around February 2020. So we anticipated that the stock will have a bit of resistance there, but as you can see, it never broke below this level. It kept on finding support. Eventually it broke above this level there. So whenever a stock break above resistance level, we normally expect that it will break above, come back, retest that level, and then continue to trade high. But that is not cast into stone. It happens that a stock can break above a resistance level and just continue to trade high and never come back to retest a certain level. So that is why you can buy a breakout as it happens and then have your stop loss just below the breakout resistance in case it doesn't come back. But if you do miss the breakout, it's possible that the stock can break above, then come back, retest that level, and then reject the lower prices here, and then continue to trade high. So if that happens, then you can buy the dip there when it happens, or you can wait for the stock to reach this particular level and then break above that level. And then there are so many ways to trade the market, to take new positions. There's just no single way to play the market. There are many different ways. So in this case, there was this breakout there, the retest, then it attempted to trade higher, and then as you can see now, we saw that it dipped, coming back to the 200-day moving average, which acted as a dynamic support level, but also correspond to this previous resistance level. So then it means that we have a confluence in terms of a support. We have a support from this horizontal resistance level, and also we have a support from the 200-day moving average. And as you can see here, yesterday, the stock, it closed higher, and it happened on a significant large volume compared to the previous day volume, which was red there. So now we are confident that this downtrend has been broken. Well, you can't say you're confident, because if you lose money on this trade, you're going to think that we're just bullshitting you. Anyway, we are confident that this is a nice reversal there, as it is accompanied by volume. And also, if you look at the volatility is very low. If you've been following this channel for a while, every time we buy a dip or we buy a breakout, we normally do it where we measure the volatility using ATR. Whenever the volatility is low, that just tells us that a lot of good things are happening. Like I said, we have a confluence here. It's a horizontal support level. Also, it's a 200-day moving average support level. We saw that that bounce was supported by volume, and also it's happening at a low volatile area, meaning that you can buy more of this stock without taking too much risk. So yeah, we really love this trade. But yeah, that's just a side comment. So we'll be looking to enter this position today at the market open. The short-term target that we're looking at, it's somewhere around 64 Rand per share. And then we can set our stop loss just near 52 Rand per share, so that we have that. That's about between 1:2 and 1:3 risk reward ratio. But also we're expecting Woolworths to continue to trade beyond 64 Rand per share. So for those that love news, we saw that they started selling some part of the businesses to restructure their debt. So some of the previously poor performing businesses have been cut out. Well, we're not saying the businesses that are remaining are better businesses, but a lot of the non-profitable businesses have been chucked away. So if you look at the earnings there, we saw that around September 2020, the earnings were just 6 cents there. So they were still less. So it's earnings per share. Usually they are reported in cents. And then they started to increase, going back to about 1 Rand 93 cents earlier this year in February. And then recently in September, they went to 1 Rand 45. So that was a slight decrease compared to the earnings that they reported in February. But the difference is that after after 2 months, 2 reporting periods where they didn't declare a dividend, with the recent results that came out in August, where we saw the earnings at 1 Rand 45 per share, then they declared a dividend of 66 cents. That was the gross dividend. So it happens with companies. You see, they last paid dividend in March 2020. Then for 2 periods, they skipped a dividend, but now the earnings started to accelerate, come back, and then recently they did declare a dividend. The dividend has already been paid. So Don't buy Woolworths expecting a dividend. The shareholders have already received a dividend. For now, we are just looking for an entry point for those who that have missed that trade here, somewhere from 36 Rand per share, moving all the way to 64 Rand. So that's it for today. Those are the few companies that we wanted to look at. I will have a timestamp on this analysis so that you can just jump straight to the company that you're interested in. Remember, we looked at Standard Bank, Nedbank, Mr. Price, and then we finally looked at Woolworths. Like I said again, if you don't want to miss this analysis that we do on our channel, make sure that you click subscribe and that you click the bell notification icon there. And also, if you have any comments, suggestions, or even complaints, you can just leave them in the comment section. We will attend to them and then see if there's something that you can do about it. All right, thank you. We will see you on the next analysis.